After months of negotiation, in fact years of negotiation, the Essar Group today announced the closure of its $12.9 billion deal to sell its refining arm to a consortium led by Russian oil major Rosneft. Rosneft, along with Russian private equity fund United Capital Partners and Swiss commodity trading firm Trafigura, will be buying around 98% stake in Essar Oil. The completion of the deal comes as a huge relief to the Essar Group, which has been grappling with debt for quite some time now. CNBC TV 18's Nisha Podar caught up with Tony Fountain, the chairman and non-executive director of Essar Oil, a short while ago. Here's that conversation.
Tony Fountain, so good to have you on CNBC TV 18. Of course, it's a large transaction and many congratulations for finally completing it. Now, with such quality names really coming in and buying out Essar Oil, what is the kind of enhancement and optimization of the assets that we see? And given the strength and the deep pockets you have, are there expansions also lined up?
So in terms of the expansion plans and the opportunities that the owners see in these assets, clearly those expansion plans are part of the reason they're buying it and one of the attractions. I think you need to look at the here and now, and you need to look at the future. So in terms of the here and now, clearly Rosneft has tremendous oil supplies. Trafigura has an extensive set of access and expertise around the world. I mean, all the relationships with those companies, I mean, the intention is to fully use and commercially optimize the set of assets that are there to the maximum they can, and to access that information and expertise. But the near-term relationship with those companies, whatever we do, it's always going to be to buy the best crude, sell the best products to the best markets, and whether that's Rosneft and Trafigura or whether it's another company, all those deals will obviously be at arm's length basis. But we hope to have a richer set of opportunities. I think, more substantively, looking at the investment cycle, there is a significant expansion underway on the retail side. It's grown very rapidly since the reopening of the market to over 3,500 sites. The plans are in place to expand that to 6,000, and we absolutely plan to press ahead and continue with those, and the management team know that. There are all sorts of opportunities around the refinery, its logistics, its port facilities, and in terms of that, what we've asked is for the new CEO, Mr. Anand, given him the task of doing a full asset development plan to show us what assets, what opportunities there may be or are for investment, and to bring that forward to the board.
So to enhance the current operational performance, and with Rosneft on board, do you think crude sourcing will be something very important? And also, is there a plan for that in terms of synergies?
So I mean, in terms of crude sourcing and possible relationship with Rosneft, I think if you look at the value in commercial opportunities, probably crude sourcing is, on a day-to-day basis, is the single largest source of getting that right. Is probably maybe the single largest source of commercial optimization. So certainly we put great emphasis on crude sourcing. I think having a better financial balance sheet will allow us opportunities that in general. We certainly hope to see, not only from Rosneft but from Trafigura, maybe some opportunities that aren't seen today. But not only will we look at those, we'll look at every opportunity from every seller in every part of the world, and run the best slate we can.
You spoke about the financial strength and strength of balance sheet as well. You're taking over $5 billion of debt by way of this transaction, out of $12.9 billion of enterprise value. Now, when are you planning, to refinance this $5 billion debt? Because definitely the credit rating for you could be far better than what Essar commanded.
Well, I hope our financial strength will immediately be reflected. But of course, now it's a privately held company. But we will look to look at this $5 billion of that as working capital. $4 billion is more traditional categories of debt. One of the early priorities, so I'm talking months rather than years, is to work with the banks and the financial institutions to look at the ways of refinancing those sources of debt in a way that is more optimal for the company.
few months means this financial year, this calendar year. Is that a timeline that you're working with as of today?
I don't want to bind the CEO exactly to a timeline, but it's certainly a matter of the next several months rather than extending into the next year.
All right, and so this financial year, you're saying that you should be doing it, but are more Indian banks with exposure?
I didn't, just to be clear, I didn't say necessarily this financial year. I said over the next several months, but less than a, but in the
less
12
than a
months,
year.
but less than a year's period.
All right,
yeah.
thanks for correcting. But are more Indian banks with exposure to Essar Oil currently are willing to stay on by refinancing, or are you going to get a large part of the debt refinanced by global lenders?
I think that the financing and the source of finance really hasn't been determined, but I do think that we've had tremendous support from the Indian banking community. So I have every reason to think that the Indian bank and financial institutions will be a central part of the forward financing program as well as the historic.
All right, and your Iran liability, is that part of the $12.9 billion enterprise value?
The Iranian liability as part of this agreement will be resolved and settled. So as part of the structure, that debt will be extinguished. The actual mechanics of that will take a period of time for the final negotiations to occur to close the exact number that is, but that has been included as part of the deal, is closing that liability down.
How much of it is non-compete in this?
So I think it's important to distinguish between non-compete and brand license issues.
All right.
So as part of the deal, the Essar, the retail sites are very important. It's a well-regarded brand at the retail level, and we have a branded license that's very long-term, very long-term indeed, in terms of access to that, in terms of that brand. There are non-compete clauses in terms of the Essar Group's entry into refining or into the retail side. That's a much shorter-term construct, matter of years, several years rather than decades.
All right, so you have a brand royalty which you will pay to Essar Group as part of this transaction,
indeed,
but not a non-compete fee to the company, to the erstwhile promoter.
That would be a correct understanding.
All right. We also wanted to understand this because there are shareholders who are set to get the margin that you gain on top of the delisting price with this particular transaction that Essar Group has to settle with them, and also the squeeze out of the minority shareholders who are still holding 1.7% stake in the company. So how are you going to do that? Do you have a plan for that?
So let me talk about minority shareholders, and I certainly don't want to use terms like squeeze out. We respect the minority shareholders. We will have a plan of what the forward plan with those shareholders is, and whilst they're our equity holders, we treat them with the respect that their investments deserve. I'm sorry, your second question was?
Yeah, about the squeeze out, and you said that we will look at that. So you are going to probably make a lucrative offer to them to ideally get out of their shareholding?
No, I'm not saying that at all. We may want to enjoy their ongoing support and ownership. I think we just need to have a plan for the right treatment of those minority shareholders.
Are you privy as to how much is the incremental amount that could be paid to the minority shareholders before delisting that could be given as part of this transaction by Essar Group?
I think that's, the uses of the funds that we're putting in with what the sellers, how the sellers are using those is clearly a matter for the sellers.
All right, and LIC nominee is still on board. Why?
LIC nominee, as part of this transaction, most of the debt has been taken on by us. The LIC debt is actually being unwound as part of that. I think once we get through this sort of closing period of the few days, there wouldn't be a reason to have an LIC nominee on the board.
And finally, with this platform, any inorganic acquisition also lined up in India? Could that be something that you look at in future?
In terms of inorganic opportunities, I certainly don't want to talk about what the other plans for the owners might be, but certainly in terms of Essar Oil. We start from a platform of having opportunities around the retail expansion and a set of attractive opportunities that we want to have a good plan for around the existing assets, and that will be our early focus.
All right, all the best. Thanks, Tony, for joining us.
Thank you very much.
Thank you.